Would you diagnose a patient without an X-ray? Of course not. So why are so many dental practice owners running $1 million business without financial benchmarks? No comparison, no defined targets, no performance standards. Just production numbers and hope. Today, I'm going to explain why operating without benchmarks is one of the biggest hidden risks in private practice ownership, and how it quietly reduces your EBITDA margin and profit margin without you realizing it. Here is the problem. Most dental practice owners look at two things: production and bank balance. And if those look okay, they assume the business is healthy. But revenue alone doesn't tell you if employee expenses are creeping up, if dental supplies and advertising are reducing your EBITDA, if your profits are shrinking year over year. Without benchmarks, you don't know what healthy actually looks like. You're not managing profits, you are reacting to cash flow. And those are two very different things. If you haven't met, my name is DJ Bhola, and we specialize in bookkeeping and financial reporting for dental practice owners. We help practices get clean, updated monthly financials so ownership can make better decisions for the practice. On this channel, we focus on clear numbers, better decisions, and higher profits for your dental practice. Let's define what benchmarks look like for single practice owners in 2025. Here are the peer averages. Employee expenses at 31%, associate specialist expenses at about 3.83%, dental supplies at about 5.8%, and so on and so forth. EBITDA is approximately 35.22%. And very important, for single practices, that 35.22 EBITDA is calculated before owner compensation. This measures true operating performance, not how much the owner chooses to pay themselves. Now, compare that to group practices. The average EBITDA for dental groups is about 17%. Different structure, different overhead, different expectations. Now, let's clarify margins. EBITDA measures operating performance before interest, taxes, depreciation, and amortization, and before compensation in single practice ownership. Profit reflects what is left after expenses, including depreciation, amortization, interest, etc. Without benchmarks, you don't know if your EBITDA is staying strong or quietly decreasing. Let's look at an example. Dr. Patel owns a 1.6 million single location practice. Revenue is stable, schedule is full, cash flow seems fine. But when we benchmark his numbers, employee expenses are at 34% versus 31%. Dental supplies are at 6.8% versus the normal of 5.58%. Advertising is at 4% versus the normal average of 2.5%. That's roughly 4 to 5% more than the peer averages. On $1.6 million collections, every 1% equals $16,000. If he is 5% inefficient, that's $80,000, reducing his EBITDA. And because EBITDA flows down into profit, that reduction affects what he ultimately keeps. Nothing felt wrong, but his EBITDA dropped from what should have been near 35% closer to 30%. And that difference impacts long-term wealth. Why operating without benchmarks is dangerous. Number one, EBITDA decrease happens quietly. Revenue can grow while EBITDA shrinks. If revenue grows 10%, but expenses grow 12%, your EBITDA declines, even though collections are going up. Without benchmarks, you won't catch that early, and hence, you will not have the opportunity to fix it. Number two, profit margin becomes unpredictable. When EBITDA fluctuates without control, profits become inconsistent. That affects owner's income, tax planning, debt servicing, and the valuation of the dental practice. Number three, exit value suffers. Buyers and investors focus heavily on EBITDA. If a single practice should operate near a 35% EBITDA before owner compensation, but actually runs at 28%, that gap directly affects valuation multiples. Benchmarks don't just protect monthly income, they protect the enterprise value of the dental practice. Here is the takeaway. Revenue shows activity. Margins show performance. You should know the following: your EBITDA before owner compensation in a single practice, how your employee expenses compare to the 31% average, how your dental supplies compare to the 5.58 industry average, your rolling 3-month trends. If you don't know your numbers, you don't know your business efficiency. Benchmarks create clarity, discipline, control, and control protects EBITDA and increases profit over time. If you're not reviewing your EBITDA and profit margin against structured dental benchmarks on a rolling 3-month basis, that's the first place to start, because what gets measured improves over time. Clear numbers, better decisions, and higher profits for your dental practice. I will see you in the next one.